Good day, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon webinar series. Before we get started, let's take a look at the shared disclaimer. Be aware that neither Market Chameleon, Dimitri, or himself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinar shows, are for informational purposes only concerning Market Chameleon tools and products. One more magical look at that disclaimer, and let's welcome Dimitri Pargamonic to the stage. How you doing, Dima?
Good morning, Will. How are you?
Great. Today we're going to be talking about screening calendar spreads.
Yeah. And what we'll do is go to a tool that allows us to do that, and then we'll just discuss more about screening for calendar spreads and how you could use this tool to gain insights, find potential opportunities, see where things are trading, prices relative to markets. So let's first go to a screener that looks at multi-leg trades. So under screeners, we have these multi-leg trade screener, and click on that. And what this screener does is look at actual trades that are reported on the option trade tape, and it takes that information and does an analysis and interpretation of where there are spreads. So it takes the spread trades and puts them separately than from single leg trades, because the exchanges do tell you which legs are part of a spread, and then it assembles it and comes up with, like, this is the most likely spread type, these are the legs of the spread, the trade time, the price, and etc. So once we have this, you could see that yesterday we had over 5,880 different spreads that we detected that traded in the market. And spreads could be different types. You could see put butterfly, calendar double call spread, put spread. So let's say in our example for today, we are trying to look for calendar spreads. Maybe we are particularly interested in a strategy type. And when we look, as a trader, if you're looking for calendar spreads, one place to get ideas or look for opportunities is to see what other people are trading, where's their activity, right? Where's their actual trading going on, liquidity, where I could see the prices being traded, the option legs being traded. Hey, well, there's some background noise from
Sorry, D.
so uh, a common typical place to look for those is to see what other people are doing, and we want to do it quickly, so we could kind of scan through it, see if there's anything that interests us or meets your particular criteria, and then you could analyze it further. If not, move on to a different type of potential opportunity. So let's say we're looking for a calendar spread. I'm going to come up here, spread type, and let's drop down this menu. And these are all the different spreads that we detected traded on the day. And if we're looking for a calendar spread, let's say, it's either a calendar call spread, calendar put spread. Let's say we want to look at a calendar call spread. And click on that. Now this filters out for us all these calendar call spreads that we detected, over 295 of them. So there are 295 calendar call spreads. These are now sorted by the ones with highest volume. So you could see in symbol SLB between 940 and 343, there's 20,038 contracts that traded in this particular calendar call spread. It was the August 15th, September 19th, 35 call. So calendar call spread, what does it involve? It involves two different legs. You're buying one, selling another, on the same strike, same option type, but different expirations. So they both are 35 call. They're both you have 35 strike call, but the one leg is on August 15th, the other one September 19th. So you can see the near term has 10 days to expiration, the longer term has 45 days to expiration. And if we scroll over here, we get these other details that it traded for a VWAP price of 61 cents. We say VWAP price because it did trade 7 times. The VWAP price and ask at the time was 57 cents, 63 cents. So this tells us that it's trading basically around midpoint, a little bit higher than midpoint, but there's liquidity certainly in this spread, because we could see that it's trading in between the markets, and almost at midpoint. The stock reference price VWAP was 33.05. So what this lets us do is compare it to the strike, right? So depending on which side of the spread you're doing, if you're looking to get long the spread, if you're buying September 19th and selling August 15th, then you want the stock to go from 33.05 to 35, right, at August 15th expiration, because that's your sweet spot if you're long it, right? You also want implied volatilities to, in the longer term, to move up. But as far as stock direction, if you're long the call spread, you want the stock to go to the strike price on this first expiration. Why? Well, because at 35, this August 15th call that you sold becomes worthless, right? So whatever you sold it for, that you collected that premium, and then you're left over with the September 1935 call. And when the stock is right at the money, that's where your time premium is the highest, right? Because that option is all premium. It's not in the money anymore, so it's all premium. So if you're taking that viewpoint and you're trading SLB, that could be something that you look for. If not, you move on. And if you believe the other side, you could also consider the other side. But at least something out there is already trading. There are eyes on it. There's interest from both parties to trade this, and that you could potentially do it at a price that seems reasonable relative to the bid and ask. And you could, if you wanted to just, let's say, filter out a specific stock that you're looking for calendar spreads, we could type it in here in a search box. And let's say we are looking at QQQ, right? So QQQ. And now we filtered out, just for QQQ, we have 17 calendar call spreads. The top one traded at 304.06. So this calendar call spread was the August 15th, August 29th, 570 call. And this one actually had stock tied to it, 22,000 shares of stock, which could indicate that the spread itself was also done potentially delta neutral. So the person who looked at this spread wanted to hedge off that directional risk, but wanted to do that side of the for volatility purposes, right? If you're trying to get long vol, or maybe it's even a roll from August 15th to August 29th, that's a potential too. We'd have to go look at it. But that was tied to stock. And again, we could come over here and just kind of see, like, okay, stock was 560, so it's $10 away. The days to expiration, the front month is 10 days away. The next month is 24 days to expiration. The traded price, VWAP price, 377. So here we see, it's closer to the bid. That's where it's trading. But a little bit, better price improvement than from the bid. And that could maybe indicate two things. Maybe if you're trying, let's say we're a trader and what we're looking for is to maybe get long this spread. Well, that could be a different type of opportunity where like, well, maybe if I'm trying to get long this spread, I could potentially try to put a bid at, let's say, a penny above the bid, maybe 2 pennies above the bid, and get a better price execution because there's a seller there, right? So as a trader, we're trying to see how we could get a price improvement. And one way is to see where things are trading and that we could participate in a place where we could get our own price improvement. So that, is a couple ways to use the calendar call spread screener to start looking. And you could see we quickly looked at, we filtered out the top ones. We filtered out a specific stock. We could do it, a couple different ways, but, could do a trade price relative to, let's say, I'm going to remove this. And let's just say we are looking for price improvements to buy the spread, right? So let's say we wanted to see if anything is trading right on the bid. So here, there's a bunch of stocks. Here's one in SPY where something traded right on the bid. Something here traded right on the bid, which may be an opportunity to look for call spreads where if I'm looking for getting long a calendar spread and in addition to get a price improvement and participate on something where we already see a price discovery because these are already actual trades going on, that's another way to use this screener from that perspective. I'm going to let go here. Pick any. A lot of these spreads what we saw were, some of them were like 0 DTs, so days to expiration. Let's say we wanted to look something further out. So the near term expiration, let's say we want more than 20 days, right? So these are the ones with more than 20 days near term. Let's say the further one out, we want more than 60 days. So now what I did was look for calendar spreads with conditions days to expiration on each leg, right? So the first one more than 20 days to expiration. The next one I need more than 60 days. Okay, so now we have 42 of those. You could see IWM, Citigroup, IWM, and so on. So this lets us look at maybe longer term calendar spreads. If we want to do shorter term, we could also use these different drop downs to select that. If we wanted to do the same thing for put spreads, we could just look at calendar put spread. And now we have calendar put spreads. Same idea here, but now we switched it to puts instead of calls. And Will, I'm going to stop there and throw it back to you. These were the features that I wanted to go over today.
Yeah, that was great, D. Thanks for bringing that to the Chameleon community. You have a great day, and we'll see you tomorrow, my friend.
All right. Thanks, everyone, for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
See you tomorrow, D. Thanks so much. Bye. Hey, everyone. Thanks for joining the Market Chameleon webinar series. If you're following us on any of the social platforms, please like and share with your friends. If you're on YouTube, thumbs up, always appreciate. Remember to hit the follow button. Everyone have a safe trading day out there, and we will see you tomorrow. Have a great day.